How low will the markets go? You need to see this. I am Dr. Stock, Doctor of Education, and if you are what you eat, then does eating crab dip make you grumpy? All right, we're going to take a look at SPY and QQQ in this video, and then a select few stocks that I have, including some updated commentary on it, Tesla and Nvidia. I'll even toss in Bitcoin as a bonus in this video. So take a look at these technicals. I've been tracking for a while this rising wedge pattern that I was talking about with SPY, and we even had some bearish divergence that I was tracking as well, and I said it's possible we could sell off sometime soon. And lo and behold, we got two big old red candles. This most recent one, as of yesterday, we lost the 50-day SMA and EMA. That's the red and the blue lines that are on this chart that we're looking at here. And so that could be something that's absolutely critical for us. Now, we could easily come back up and retest the moving average for resistance, and if we get rejected off of that, we could head down lower. Just how low? Right around 498 or 500, according to what we have on the Fibonacci's, on the Fibonacci retracements. That'd be the 23.6, and then down from there would take us all the way down to about $480 per share. Should we push down below that? So we could most definitely be in an area now where we find ourselves in some sort of corrective territory, and that what we've seen is just the beginning of that correction. So we're going to be watching for that with SPY, especially the earnings coming out. We can see a lot of reactions coming out to that might be a little bit outsized. The RSI is definitely showing us on a daily basis to be in the bearish territory of things. So we'll watch and see that for that retracement that we could possibly get back up to the upside a little bit, see if we get rejected at resistance. And if we do get rejected at that 50-day, that could be that signal to go short onto the SPY, at least in the near term, to take advantage of that correction as it comes in. So for QQQ, according to what we have on the Fibonacci's here, down to the 23.6 level from what I have right here off of this bottom going all the way back to October of 22, that would put us all the way down at 406. However, if we move that to a more recent bottom that we have right here, that's where that other yellow line comes in, right at about 424. So I think that we could possibly see that 5-ish% correction, especially if we see continued rise in tensions among the Middle East. That 5% could lead to 10% if things continue to escalate there. And also we want to keep an eye on the economy for any sort of signs of deterioration that we have, especially where inflation's involved and what the Fed is signaling to us in terms of their rate cutting policy. So when we look at Bitcoin right now we're seeing some buying pressure come back in, but it is possible we continue to slide all the way down to the 38.2 level on the Fibonacci, going all the way back to January of this year, around the time, not too long after what we had for the Bitcoin ETFs to come into play for us. So going from January all the way up until we peaked out, that would be on March the 14th on Pi Day, and then we sort of went sideways a little bit on that, now selling down 60,000, down to about 55, 56,000. We're going to be watching for that, even possibly down to the 61.8 level of 50,000. In the near term for Bitcoin, the Bitcoin halving coming up on April the 20th, got to be watchful for that as well. That could cause a near-term rally to happen, and Bitcoin still being seen as a bit of a risk asset, even though some people would hedge it for inflation, for example, or be something supplemental to a position in gold maybe. This could be something where we don't necessarily see the same sell-off that we've seen historically for Bitcoin, and that we would continue to be around these prices, probably in the 50K plus area for this. We're going to have to watch and see, and I still do think that over the next 6 to 12 months, depending on what we see, I still think that 100K is still possibly there for us, especially as we get through the correction period in the markets, if that's where we find ourselves. So don't know for sure, but it's something that I'm watching out for, especially the fact that we've crossed down below the 50-day on the QQQ and on SPY. Nphase is a stock that I've been tracking, and something important about the Nphase stock when we look at it is that this formation that we've had, this ascending triangle formation, as of yesterday's close, we actually closed down below the trend line. Today in the pre-market hours, even though we were dipped down, I saw as low as 110 so far, and this is the daily chart that we're looking at. We can look at the extended hours on this. We are below that trend line, need to be watchful for that for a full candle close down below that trend line. That could signal a further sell down to about 100. And then if we lose that 100 mark, you can see the different supports that we'd have in here that we keep on finding some support right around 95, and from there right around 85. So we're going to have to watch and see in the near term. This is a stock that I do continue to dollar cost average into, so I do have a position in it, and it's a position that I will continue to build out over time. The golden cross looks like, at least for right now, being that we crossed back down below the 50-day, got rejected at 200-day again, that golden cross moment, maybe once again we're getting rejected. That we're going to have to keep on watching and seeing what happens with Nphase and seeing what happens with the overall markets, because that market bias is going to have a significant impact on what we see for Nphase. So moving over into Tesla. Tesla in the pre-market hours crossing down below 160 at 158. That could actually lead us down to what we saw back all the way over here. This is the weekly chart that we're looking at. This is the week of the 24th of April. And so that earnings week that we had going all the way back to a year ago, that bottom that we had on that was about 152.37. And so we could actually lose another $6 from where we're at right now. We could test that. Should we fall down through that, there is not a lot of historic support that we have between there and what we'd have down at about 130 to 125, and then from there all the way down to 100. And I did have a video that I released a while back about what we have here with this bear flag pattern that was coming out. It could possibly push down to that $100 mark. So we need to be watchful for that. For Tesla, we know that sentiment overall on EVs has not been all that strong necessarily for us, and being in the interest rate sensitive area of the stock market, then what we're seeing right now isn't great for that. Their deliveries dropping, not great. But again, Elon also said that they're between S-curves right now. They've cut full self-driving down to $99 a month, which I think is going to be absolutely huge. And I don't think that this should be missed. If they're actually going to compete, continue to lead in the full self-driving, the area of autonomous driving, they really need to get more miles on the road to continue to build out the AI models that they have. That's just going to take an enormous amount of data. So it would behoove them in the short term to take that hit against what they're currently bringing in for revenue, impact their profit margins, and for something to bring in that further adoption into that, to bring in more robust models for AI overall, because they can have better training for those models, especially going to August 8th, which is when we're supposed to see that robo-taxi or full self-driving rollout coming out around that time. So for Tesla, it is possible to continue to be bearish in the near term. When we look at this on the weekly chart, down in bearish territory, not yet oversold. And we look at a daily basis, we're also not yet oversold. We could continue down for a little while yet on Tesla. Their earnings are next week. I'm going to put up my stock price prediction on the Patreon. You can find that link down in the description. Nvidia put on my stock price prediction at $1,000 leading up to their earnings, which is towards the end of May. I believe if I click here, it tells us Wednesday, May 22nd. I don't know if that's official, but I believe at this point that it's official. We can check their investor relation page to find out that exact date of when that occurs. I did say market multiples are going to affect this, and as long as we don't have a significant shift downward in the markets, then this $1,000 price prediction that I have here for the stock, I think will hold out for us running up to those earnings. So that's if the market's pretty much sideways or up. If the market is down, we still have a shot at this, but we don't have the market support behind it. So we want to be watchful for that as we get into the stock price prediction that I have. And I have it spanning that $1,000 line that I have right here. So we could see that excitement still coming in for Nvidia, assuming that the markets aren't far off from where they're at right now to the downside. If they're still near where they're at or up, that would increase the chances that we'd see that $1,000 mark hit. So thank you guys for watching this video. I really do appreciate it. If you want to see what I'm buying and selling and talk with me and my community members over in the Discord, available through my Patreon, that link is down in the description. Also down there, you'll find a link for a technical analysis trading course. If you learn to do technical analysis like I do and up your trading game, you can find that link down in the description as well. As always, guys, I really do appreciate the time that you spend here. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.